Well, hello, traders and investors. My name is Roger Scott. I'm the head trader for Wealth Press. Today is Friday, September 18th. And yeah, I still don't know where this month is going. But let's talk about world economy. And you know what? I figured it's Friday. I haven't given you red meat in a while. Well, I have. I've been giving you signals left and right, but I haven't been giving you specific trades. So today I'm going to give you a specific trade in one of the stocks that I'm really liking right now. And I believe it's going to be profitable. There's no guarantees, but I believe it'll be profitable, and I'll give you the option as well. But first, let's get into global economy. Global shares were mixed on Friday. Investors weighted uncertainties around global economy and a new rise in COVID cases in many countries, which is unfortunate because this thing, soon it's going to be a year. Traders are assessing, especially if it started in December instead of February like they're talking now. Traders are assessing whether recent gains in the stock market are overdone. I think they may be just a little bit overdone, considering a glum economic outlook. I love this word glum. Does anybody use this word glum? How about glim or glum? I don't know. Economists say that the speed of the recovery from the global recession will depend on containing the spread of the COVID, which is picking up again. It's COVID part 2, which means keep your eye on those stay-at-home stocks. Central banks, including the Federal Reserve, Bank of England, and Bank of Japan this week refrained from providing more stimulus, but are committed to keeping rates low until growth picks up sustainably. Investors are really hoping for some aid because it seems like if we're not going to get some, the market's going to start faltering a little bit. Yeah, they're glum, faltering. I'm using fancy schmancy words today. U.S. job figures on Thursday highlighted how the economy is struggling to rebound. Official records showed that the number of Americans applying for unemployment benefits fell only slightly last week. We're still below the 4-week moving average at 860,000. A historically high number that illustrates that the broad damage still takes place 9 months. That's what I was saying. Soon it'll be a year. After the first known case of COVID-19 was detected in the U.S. And here's some more info on that. That's retail sales. But to give you some understanding, I was looking at the jobless claims yesterday, and the expectations were between 800 and 895,000. We came in at 860,000, which is below the moving average, and that's really the key right there. So right now, crude oil is still below the $42 a barrel, but it's getting up there. This is the price, $42 a barrel is what U.S. frackers pay for oil before they process it. So any price below $40 a barrel puts U.S. stocks in a bad place. So now let's talk about the broader market. Now I wanted to show you, this is my cumulative strength index, and as I showed you yesterday, tech is no longer leading. Basic materials is leading, and I believe that industrial and consumer staples and more defensive stocks are going to lead. If we look at the S&P 500, and if we look at the strength, the top stock is FedEx. Yes, I hate to say I told you so. I told you guys about FedEx like 2 months ago. And yes, UPS too. It's up substantially since I first brought it up because I explained to you when we heard retail sales were going to go up, they're still going up. People are just buying things, so they're shipping them. And guess who's profiting? FedEx, UPS, PayPal, all the companies that are up here. Where's PayPal? PayPal should be up here too. I guess it's down. There it is. Remember, this is the S&P 500, so there's 500 stocks, not 100. Now, let's get into the good stuff. Today, what am I looking at? Well, I'm actually looking at one stock in particular, L Brands, ticker symbol LB. Why? Retail sales are the last to report. They've been slightly above estimates, and I like L Brands. I like Gap as well, but I like L Brands better. Now, if we look at L Brands, you will see that the stock, it's a strong buy. We only pick stocks that are strong buys, but not using that rating scale. And as you could see here, it moved up. It had a nice gap. It moved up, but it didn't break down below the gap. And it looks like it's ready to go for part 2. I told you today's all about fancy terms. So part 2, that's French. Anyhow, how I know that, I have no idea. Anyhow, I would be buying at the level right at the $32 level, maybe 32 and a hair, $32.10 level. And I would pull a liquidation stop at the 37.40 level. If it breaks this little pivot here, low pivot, I'm out. So we don't want to be below this pivot. Matter of fact, you could probably buy just a little bit above the current price. The key is don't overstay your welcome. And as far as options, the stock price is $32 right now. Let's look at some options. We haven't done this in a while. So this one expires in, let's see here. How far can we go? I like to go about 80 days, 90 days. Let's see here. That's 43 days. Here we go. Perfect. 64 days. I'll give it about 20 days. If I don't see any movement, I'm out. If I see it hit that 27 pivot, I'm out. I'm looking for any reason to be out, not to be in. Most traders, when they're losing on a trade, they look for every reason to keep holding it. I'm looking for every reason to get out of it. So $30 right now. Let's look at the 30 strike price. Implied volatility is a little high, but that's probably a good thing. That means traders are looking for the stock to move. Open interest is pretty good here. Volume is fine. The spread between the bid and the offer is, I don't even know. It's like 7 cents. But yeah, I like the 30 strike price. I also like the 32.50 strike price. But honestly, with this option so cheap, I would just go with the 30 strike price. It's at $30 right now. Just go a little bit in the money. And if it goes to about $2, I would just get out about $2. You can also go for the 31 almost costs the same. You can also go for the 32.50, but I'm not really happy about open interest. I like the 30 better. So this option expires November 20th, 64 days. I'll give it 3 weeks. If the stock gets stopped out based on the stock value, or if it just stalls out, not interested. Or if I see market really pulling down, probably not a good time. But I don't like tech right now. I think tech is going to be under pressure for quite some time. But I think retail is going to see some positive numbers, especially with Nike reporting next week. And that's another stock I like. Let's take a look at it. So again, November 20th, 30 strike price. The entry price, I mean, you can get into it right now. I kind of like the stock, maybe just a hair higher, like at the 31.50 level. But the stop loss is at 27.30, 27.40, right below this little pivot right here. That's where we want to put our stop loss. If it goes there, we don't like it. So ticker symbol LB, November 20th calls. Now let's look at Nike. I like Nike. Nike is cooling off a little bit. It's got earnings next week, but this is one of the strongest stocks, but it's not as strong as L Brands, as you could see here. Let's try to find Nike. Best Buy looks pretty good. Where's Nike? Did I miss Nike? Yeah, Nike's not all the way up on our list up here yet. Let's look at Nike. Where's my Nike? Remember, this is 500 stocks, so even if it's down here, which is like 20th stock, it's still like 5th percentile. So it's still looking pretty good. I mean, it's with Take-Two, and it's with Leonard Holmes. It's right up here, but it's not up here, all the way on top. Again, L Brands looks really good. Keep your eye on Gap. Keep your eye on Target. Target's up here. Keep your eye on Amazon. Always keep your eye on Amazon. Best Buy, definitely keep your eye on Best Buy. I ordered something and now they told me they're on back order, which sucks, but it is what it is. And what else we got here? And obviously Nike. But those are the best ones. My favorite right now out of all the retailers is L Brands. I usually go with Lulu or Crocs, but L Brands is killing it right now. Now, folks, it's Friday, and I want you to pay real close attention. America's number one pre-market trader, Tom Busby, and I are about to expose something earth-shattering about the stock market. It all started with an undercover recording, and now it turned into something so much larger. So some are starting to say we've hacked the market. Finally, we've gotten to that. People have said a lot of things, but they've never said we've hacked the market till now. But all the money is made before the market opens. Notice I'm doing my analysis before the market opens. I'm going to trade during market hours, but my analysis happens before the opening bell. I could figure out so much about what's going to happen during the trading session based on what happened with stocks overnight, based on what China's doing, so forth and so forth. In fact, this new pre-market strategy could turn a measly $1,000 into $12,396 in just 1 year. That's over 120% return, folks. And the accuracy, I think it's like 4 out of 5 trades are winners, which is crazy good. Click on the link below to learn our secret pre-market strategy. We analyze before the market opens, and we strike when the iron is hot during market hours. You can't afford to miss this. Tom Busby is hot. Follow the link below. Get in on this now. Talk soon. Most importantly, have a great weekend. Leave me some comments. Talk soon. Bye, guys.